Welcome back. You got Will and I-Man here from the Block Runner, MetaZone, and Rovi, and today we're going to be talking about another SEC probe. We said we weren't going to talk about SEC stuff again, but here we are talking about Yuga Labs.
Yeah, this one's too close to home not to talk about.
Yeah, we have to talk about this.
Yeah, the Bored Apes being the biggest, I guess, NFT project ecosystem ever of all time. So
yeah,
it makes sense for the SEC to go after them to get some more clarity, right? And what the hell's going on?
Yeah, and let's clarify, they're not going after Bored Apes at
true.
all. It's more of like just an inquiry to learn about the Metaverse and NFT lands.
Well, yeah, like how the fuck are you guys raising, $500 million like at the click of a finger? It's like, what are you guys selling over there?
Yeah.
You know what I mean?
Yeah.
And then they all of a sudden drop these tokens from, what are these, where did they come from?
What are these for?
Yeah, how come they got value to them?
Yeah.
Are you just giving them out to people who bought your NFTs? Like,
yeah.
These are the questions they're asking, right? To
For
try
sure.
and formulate an understanding.
And the SEC going after Bored Apes, the biggest NFT project out there, makes sense because if Bored Apes is violating any of these SEC rules, that means pretty much everyone is, right? So, so now I think, they go in here and the Bored Apes team, Yuga Labs, have responded. They're like, we're open to, discussing with regulators to define and shape the ecosystem and all that. So it's just an inquiry. That's not an accusation of any wrongdoing of any kind. So now that's what the SEC does, is they go and poke around to learn about the space that's happening. And
yeah, clearly, though, it's in a much more aggressive state than previous administrations, I guess. This one headed by Gary Gensler.
Yes.
Who's been much more firm on his stance that, based on his understanding, I think like in the early days, he might have been more like of a little more favorable, maybe because he didn't look too deeply into the space, but nowadays, there's more reason to.
Well, yeah, I mean, in the early days, he was saying that Bitcoin and Ethereum were not securities. All of a sudden, he's changing his stance on Ethereum.
Yeah.
And that's probably because Ethereum went through the merge. All of a sudden, it's a staking currency, and therefore there's a concentration of assets among a few.
Yes.
More centralized, and therefore more jurisdiction application from the government.
Yeah, so we spent the last couple of months basically talking about that front. Yeah. Right. The SEC looking into different, fundraising mechanisms. What else? Also trying to claim ownership of networks and such if they see a benefit to doing so, which obviously there is.
Yeah.
You can go after like foreign actors by claiming, because the majority of the network is operating under U.S. jurisdiction, now we can go after you.
That's right.
And they're using that to their full leverage and power.
Yeah.
So the SEC, they're going, dude. They're working harder than anybody in this bear market. Yeah. It looks like this is their time to shine.
That's right.
And this is important for everybody who wants to either participate in every aspect of the whole Web3 ecosystem, right? And it's not just ERC20 tokens anymore. Now it's the NFTs. And I guess at some point, this whole investigation, this event, whatever, is going to lead to a little more clarity, hopefully, on the Metaverse. But maybe not, because Yuga Labs and the Otherside, they haven't really rolled anything out yet as far as like a tangible Metaverse. Nothing to be concerned about.
That's true. That's true.
So, like us Metaverse developers, I think that's probably the next bear cycles, like
activities.
Yeah. First, we gotta create value as an ecosystem, a Metaverse ecosystem for the SEC to be like what's going on here, Lance?
Hundreds of millions of dollars worth of value before
anybody cares.
Yeah, before anyone cares, before the SEC starts investigating and therefore set precedents.
Exactly.
And so that's going to be important.
Yeah.
So I think one thing we should talk about is the Howey test and how it could apply to Bored Apes.
Okay, so how did the Howey test? Why is it important?
The Howey test is a 1946 case that occurred that Howey was like, hey guys, I have some land. If you buy this land, you don't have to do anything. I'll sell oranges using the land that you bought, which you own. And I would generate revenue by selling those oranges and distribute that revenue to all landowners. And so that is, by definition, a security, because the people who bought the land didn't do any work, depended on Howey to do the work. And if Howey was successful, they would generate revenue because Howey was selling the oranges.
Yeah. So that scenario you just laid out is broken down. I think it's in 4 little nice tenets.
Yeah, and
There's somewhere out there in the interwebs. Yeah, let's retrieve that. Just so anybody out there thinking about spinning up a project, definitely look into the Howey test. Make sure you do not fit within these core tenets. So there they are.
Was that the 4 here?
I saw 4 bullet points up there.
Oh, here it is.
There it is.
So let me read this out to you. The Supreme Court established 4 criteria to determine whether an investment contract exists. An investment contract is, number 1, an investment of money.
So in Yuga's situation, the other side, clearly,
selling land.
There was a pool of participants who invested their money, or at least we don't have, maybe not an investment, but they exchanged their money for something, right? Over $500 million worth of it. So they're looking into that.
So number 1. And number 2 is in a common enterprise.
That one's a little hard. What does that mean?
See, that is a little bit more gray area, because would a DAO be a common enterprise? I think it would be.
It's starting to seem more and more like such because of
that's true.
There's other government regulatory bodies starting to require certain
CFTC,
things. CFTC. Like entity formation. All the restrictions that any common enterprise are forced to do if they're to operate like a business that generates any kind of money. Right?
Yeah.
So
Sushi, for example, is setting up an organization to represent the DAO.
Yeah, because if you don't know the story of Sushi, it was a fork of Uniswap, right?
Yeah.
Just some community dudes who knew how to fork things and knew how to spin off into new ecosystems. They built a huge community, a huge DAO, big treasury as a result.
Yeah.
And without ever structuring as like a normal organization or company would, or business, right? So now there's precedent again.
Yep.
The CFTC went after a smaller, similar type Uki DAO, smaller organization, and fined them and told them straight up, hey, if you guys want to operate like a business, which DAOs should, to remain sustainable, right?
Yeah.
Then you guys got to abide by those same, expectations. So Sushi's doing it. So here we go, dude. Yeah. The definition of common enterprise is starting to become...
It's more solidified.
Yeah.
Okay, number 3, with the expectation of profit. That's number 3. And then finally, to be derived from the efforts of others.
There you go. That's it, dude. It's crazy. Just the whole SEC is like, they're out there cracking necks. Just for these 4 little tenants, dude. These 4 little bullets, dude. I'm saying, dude, they're out there.
Yeah.
They're hunting everyone down, dude, just to make sure you're not doing none of those or one of those. Just, if you do, dude.
You want to fail the Howey test. If you pass the Howey test, that means you are violating securities.
Yeah, you're going to get your neck cracked for sure. Yeah. They're coming, dog. But so obviously, like you said, they're not actually going after Yuga Labs.
No, they're not. They're just trying to understand what is happening in their whole ecosystem.
So it's good. Yuga already put out like a public statement like, yeah, this is no big deal, lads, and we're happy to cooperate, and we're actually looking forward to it. So we're kind of all in this industry, I guess.
Learning.
Well, we're also kind of like leaning and like hoping these guys can rep very well and like, and
I mean,
not raise enough red flags to warrant a lawsuit, right?
Yeah.
If it does, then
I'm confident with the resources that Yuga Labs has. Their legal department has contemplated all these scenarios.
Yeah.
And they've established a path that doesn't violate anything, and therefore proceeded with that path.
Interesting.
That's how I would do it.
Yeah.
Right. But I would expect them to do the same. I mean, if you have all those resources, why not?
So what do you think the SEC might be seeing to like pique their interest?
I think they want to talk to their legal team. And it's like, hey, what were you thinking when you did this? And like,
yeah, but you don't think they see anything like? Obviously, they said the ape coin drop itself is one of the red flags. Like it just feels very secure.
If they can, if Yuga Labs can prove utility for that ape coin, then it's not a security.
Well, the only utility they got at the moment is the governance application. Like, hey, this is the only reason we did this distribution to our NFT holders is so that we can determine like which of the members of the ecosystem like deserve what weight allocation in the voting process for the future. So they're going to give them that pitch, right?
Yeah, of course.
So that means in order for that to be true, they cannot do any derivation of effort, meaning like they cannot put in forth any effort into the construction of the Otherside metaverse themselves.
That's how I would interpret this. To fail the Howey test, Yuga Labs cannot develop on the land
that they've made $500 million.
Right, they cannot develop on that land, because if they develop on the land, it's the same thing as Howey developing an orange farm on the land of owners, right?
But haven't you seen their roadmap? Like the Otherside roadmap, it seems like they have a lot of development in mind.
Yeah, that's
you know what I mean?
See, that's where I think could start breaching this veil.
So we were talking about this, right? Because there's been an example of this called Decentraland. They raised $25 million in an ICO.
Mm-hmm.
They sold virtual land. And I read their original white paper, and SDK is like, yeah, we're gonna make this SDK. It's an open creator platform. Like it's up to the community. Like they put out all the right ethos into their white paper, and up until now they've kind of demonstrated, right? Like we're gonna create tools, but we're not gonna build shit on your land.
Yeah,
you know. So if you invest in land, you buy it. It's gonna be up to you as the landowner to create value, and as a community, I guess, to leverage these tools to produce things of value.
And I think that's the right way to do it, because if Decentraland had developed content on that land,
and somehow you profited from it, or like if it's just valuable content that Decentraland decided to deploy for whatever reason, like Decentraland Foundation team, whatever, they just had this great vision of a metaverse ecosystem or game.
Yeah,
it's like, we're just gonna distribute all this stuff onto everybody's land, and like if so it happens to increase the value of your land, then
I mean that's passing the Howey test right there.
I know, but that's the thing. A lot of these things are actually kind of like present within the other side.
Yeah,
like
I feel like they're going to pivot a little bit.
They might have to, depending on this, because
it's going to be a completely SDK driven world or builder driven world.
Yeah, it's kind of like what I'm leaning towards too. I think the whole idea of like injecting game
theory,
game economic components to the digital land itself, like resources, just rare artifacts, other NFTs, stuff like this. It's
bad move.
Not a good move, because you are
developing on the land.
You're contributing additional value. 100% based on the effort of the ones who distributed that land in the first place, right?
That's right.
These are red flags, right?
Yeah.
This is why they're coming. You know, why didn't they go after Decentraland? Decentraland's been around for forever.
Agreed.
Yeah, because
they're failing the Howey test. That's why.
Ooh, damn, this is kind of juicy, dude. Fuck.
Yeah, it is.
This is wild. So yeah, we might expect to see some pivoting, some readjustments, I guess, hopefully to the overall ethos to be a little more like Decentraland, right? Just to favor the community's contribution, meaning like build more SDKs.
Yeah.
Build more tools for the community to develop. Don't just roll out this vision of your verse and then sell a shit ton of land on top of that. Like that's just
because otherwise, I mean, you could go after any Web3 enabled game that is selling components of the land, which are land NFTs, and like completely developing an entire game on top of it.
Yep.
Like that is clearly violation.
Yeah, or not clearly yet, but
okay, yeah. I mean, judging by the rules,
it could be, but it hasn't been like gavel to the wood. You know what I mean? Not yet.
But I agree. If you're going to be generating a metaverse or a virtual world, and you're going to be selling land, you should be creating tools so that the community can develop on said land.
Yeah, if at minimum, whether or not that's a sustainable model or not, because Decentraland's obviously struggling bigly with this. So there's clear benefits to not taking that route, right? Because it's
harder,
more challenging.
Yeah.
Obviously, the community doesn't have like
know-how,
infinite resources and developers like the foundational teams do.
Yeah.
So
yeah,
it's a matter of centralization versus decentralization. Which ones can output better products? Obviously, centralized organizations do at the moment.
You know, having said that, I agree. It is definitely a more difficult path.
Yeah.
But if regulation dictates that that's the path that must be taken, then that's what it is.
Agreed.
Right.
So, at minimum, just to avoid any future like fights with the SEC.
For sure.
And even if like who knows, dude, maybe if they are violating So what? Maybe they'll just get like a slap on the wrist, like everybody else. Like, oh, you guys did actually. It turns out you guys did do like a unregistered security offering.
A slap on the wrist in terms of the cost of the slap versus how much they raise. Yeah, it might be tiny, but that doesn't mean that they don't have to register the securities afterwards.
I know, but what does that mean? Like, does that through the registration process, whether it takes time? Does that mean they cannot no longer develop during that period, or can they continue developing?
I think they can continue developing, but now they're a public company and they have to disclose everything on a quarterly basis.
I see.
And so that's where it becomes an overhead nightmare to maintain.
Interesting.
So you don't want to register with the SEC as a business, especially if you're early on.
Yeah.
So yeah, I think if you're going to be creating a metaverse, it has to be very specifically a metaverse where the community contributes to the construction of that metaverse, and that value is dependent on the community.
Now, what's the potential downfall risks to the actual investors themselves? Like, if this does end up being a bad case scenario for Yuga Labs and stuff, like, is it like sorry lads, we actually cannot build or something like that?
Well, I think they would have to pivot and say, look, we're going to be focusing on a community built world.
Yeah.
And here are the tools. Here's the builder. Here's the SDK.
Yeah, we know they're also, they said they're building an SDK as well. So that should be enough. Like, even if they have these game components, whatever, as part of the land itself,
it could.
It's like, so what? It means nothing if we don't build anything to like take advantage of that.
Sure, they could pitch it as these land resources that they've added to a bunch of land. They could be just developer tools to take advantage of.
Exactly.
Right, and so
SEC might be like, okay, yeah, as long as you guys don't build a freaking resource extraction.
Sure, like actually generate revenue by the work that you've done. Then it should be fine.
That's going to be interesting.
Yeah, man. Imagine assets like loot being like a tool for developers. Like, that would be an interesting kind of dynamic.
Loot.
At least from the perspective of like legalities, right? That would be very interesting.
Yeah. Well, there's going to be a lot of takeaways from this case for sure. So, damn, dude, we got a lot of like legal shit to keep our eyes on. It's kind of absurd at this point.
Ripple and the SEC. Uki Labs or Uki DAO, sorry.
Uki DAO, see what this whole Ian Bellina thing about.
Ian Bellina.
Just like a obscure like sentence in the middle of his whole case. It's like, dude, we own ETH.
Yeah.
Therefore we rule ETH. Like, keep our eye on how many more times they exercise that in the future. Who else they go after? What else, dude?
Bored Apes.
I mean, there's like some OpenSea stuff, I think, in there somewhere.
Yeah, whether or not NFTs are classified as insider trading, I believe.
Yeah, it's a bunch, dude. So this is I'm pretty sure, because we want to move on to like more fruitful topics, like what's actually being built for the next leg up. But
but this is gonna. I mean, they're not being investigated to like create precedents here. They're just SEC is just investigating. They're trying to understand what's happening. So. No major like red alerts being sound here by Bored Apes or SEC here, but it is interesting that we might get a definitive conclusion to the metaverse and like securities. Maybe.
Yeah, doubtful, but we'll see, dude.
Yeah, I don't think anything's gonna come from this, to be honest, but I mean, they're looking into it, so something has piqued their interest.
Yeah.
And of course, the price of an ape coin due to this fell 9%. And I remember, we were just talking about Mark Zuckerberg's MetaConnect, and their price went down. Was it 3%?
3%, yeah. I mean, these are very minor drops, but nonetheless, the market's reacting, and we're already so oversold in like every respect.
Yeah, it's like it can't.
Like even like positive news in the market right now, that's nothing. Apparently, like Google now, you're allowed to like search Ethereum addresses through Google now.
Oh, really?
Yeah, that's like a huge. It sounds like a huge integration, something to be very bullish about for like all of Web3, and like nobody cares because we're in a bear market.
Yeah, well, not only that, Google and Coinbase announced a partnership too.
Yeah, there you go. See?
So
more bullish news. Nobody gives a fuck.
Yeah,
it's just the market's dead right now. It's gonna stay dead for a while, but It's okay. These are the times of opportunity. So yeah, we're gonna start looking for them once we get past all these like impending law doomsday scenarios.
Yeah. All right. Well, let us know what you think about Bored Apes and the SEC. Let us know what you think in the comment section below. Follow us on Twitter at the Blockrunner, at MetaZone.io, and at Roby AI. And we'll catch you in the next video.
Peace.